Well, hello everyone. Welcome to Scott's Thoughts. I'm Scott Benedict. One of the things I've been thinking about recently is some of the key insights that can be gleaned about the state of U.S. retail from a series of recent retailer quarterly earnings reports. And I thought those reports reveal a lot about the state of U.S. retail, and I want to share some thoughts on that. First of all, in discount retail, the momentum and the benefit of consumers looking for value is certainly very real and manifesting itself in earnings reports. Companies like Five Below, Burlington's, Ollie's Bargain Outlet, Dollar General are all really kind of lighting up the scoreboard with their quarterly earnings report. Couple examples. Five Below posted a 50% jump in earnings per share and a 24% revenue growth in the most recent quarter. Burlington, similar huge increases both in earnings and in sales. Ollie's and Dollar General both had really solid improvement in earnings per share as well as top line sales. And what I think this tells us is that value driven retail is thriving, and consumers are really leaning into bargain hunting and making those off-price retail players outperform the broader market. In the case of the beauty segment, something I call affluent value is really manifesting itself in the way players like Ulta Beauty are playing out. Their sales were up 9% year over year to over 2.8 billion, and their same store sales were up 7%, reversing a trend that had been a little bit negative the year before. Earnings per share beat consensus analysts reports, and they actually raised their full year guidance up from their prior direction to the street, and their gross margin rate also improved. And so clearly a player like Ulta is bridging luxury and everyday value and really capturing the broader beauty audience that has navigated a lot of competitive pressures or force from the work of Amazon, Sephora, and what's happening online in things like TikTok Shop. And so their cohesive omnichannel strategy is really showing that it's resonating. In the big box side of the business, players like Best Buy did better than expected. Their same store sales were up 1.6%, one of the best performances for them since the pandemic. But their stock dipped a little bit after this most recent earnings report because they gave no upward guidance looking forward into the future. Gap kind of surprised the street with their performance. They had a 57-cent earning per share performance versus what was estimated to be about 55 cents a share. Their same-store sales were only up 1%, and the street had expected 2%. But really what it feels like they're doing is that they weren't as negatively impacted by what's happening in the marketplace. So it's a relative victory, but they're still struggling a little bit. Some of the bigger Wall Street giants, the giants of retail here locally, Walmart posted a really strong second quarter revenue number, $177 billion plus, beating estimates. But earnings were below where the street had expected. Same-store sales, e-commerce sales growth, advertising revenue, all looking up. But margins and profitability took a bit of a hit. Net income dropped about 43%. And the impact of tariffs on inflation and import costs really squeezed profits. Looking forward, Walmart said that they were raising their revenue projection for the balance of the year, but they did not raise their profit projection. So you take all this and patch it all together, and here's a couple of thoughts about where the consumer is. First of all, the consumer is cost conscious right now, but they're not silent. They are placing their bets and placing their dollars where they think they are getting the best value. Bargain hunters and retailers that serve bargain hunters are really doing well. At the same time, even though revenue has been relatively good, margins are under siege. Profitability is under siege. Both the impact of tariffs and inflation is really looming large in a lot of retailers. And so while there may be great signs in top line revenue, earnings for these retailers are really under pressure. The smart pivot to omnichannel is paying off for a lot of retailers, Walmart being one, Ulta being another great example, and really being present wherever, whenever, and how the consumer wants to shop. Those retailers that embrace it and have done well. And really, one of the other things that the street is expecting out of these retailers is they're really looking at signs for what retailers say about their earnings outlook for the balance of this year and into next. And so they want to know not just revenue growth, but they don't assume that with revenue growth comes profitability growth in light of what's happening with tariff and trade policies. So that's some of the major insights coming out of the last wave of retailer earnings reports. And I'm really thinking it will foretells a very interesting back half of this year and outlook into the next part of the next year. And so we'll all be watching. That's what I've been thinking about. I'm Scott Benedict.